Does personal finance ever feel like some super boring class you never ever signed up for? Well, today, we're going to ditch the textbooks. We're breaking it all down using something every single South African knows and loves, a box of Choice Assorted biscuits. So yeah, let's dive into a simple, fun, and honestly flavorful guide to your money.
And that's pretty much our promise for today. No complicated jargon, no confusing charts that make your head spin. We're just going to show you how to manage, grow, and protect your money, one simple concept, one biscuit at a time.
All right, so where do we even begin this whole journey? Well, the first, and I mean the absolute most crucial step, is understanding your money flow. You've got to know what's coming in and what's going out. I mean, think about it. You can't plan a road trip if you don't even know where you're starting from, right?
This, right here, is your master plan. And a budget isn't about restriction, it's actually about empowerment. It's the huge difference between kind of sleepwalking through your finances and making conscious, intentional decisions about where your hard-earned cash actually goes. It is your blueprint for freedom.
Now, I love how this slide just boils everything down to one simple choice. On one side, you've got savings, the samp and beans for your future self who will be so grateful. And on the other side, instant gratification. Our source hilariously calls this behaving like a toddler with your finances. But here's the key takeaway. A little bit of discipline today buys you a whole lot of choices tomorrow.
Okay, so once you've gotten a handle on your money flow, the next step isn't just about stashing it away. Nope, it's time to make your money actually grow. And this is where the fun part, investing, comes in.
And let's be super clear about this. Investing is putting your money to work in real assets that have the potential to grow. It is absolutely not the same as taking a wild guess on a sports match or, buying a lottery ticket. Investing is a real, calculated strategy for building wealth over the long term.
So you can think of these as the main ingredients in your wealth-building recipe. You've got shares, which are just tiny little pieces of actual companies. You can get into bonds, where you're basically loaning money to a government or a big company for a fixed return. Or, and this one is really popular, you can buy ETFs.
And this is just a brilliant way to think about it. An ETF bundles tons of different shares together into one neat little basket. It's exactly like opening a box of Choice Assorted. You get a fantastic variety of different things all in one go. It's such a simple way to get diversified without having to pick out every single biscuit yourself.
Now, this is the magic ingredient. Seriously. Compound interest is basically your money making babies. And then those babies start making their own babies. It's this incredible snowball effect that starts off really small, but then grows exponentially over time. It's exactly why people say the first 100,000 Rand is the hardest, because you're still pushing that snowball uphill. After that, gravity starts to do the work for you.
Okay, so you're budgeting, you're investing, your money is starting to grow. Fantastic. But now we got to talk about playing defense. How do you actually protect the wealth you are working so hard to build? Here they are, the three main shields in your financial defense system. First up, an emergency fund for when life, happens. Second, you have to fight inflation, that silent thief that makes your money worth less over time. The ever-increasing price of a Steers burger is the perfect example of this. And finally, you have to watch investment fees like a hawk.
And speaking of fees, just look at this number, 3%. If you ever see an investment with a 3% annual fee, our source material has some pretty blunt advice. Run away if your legs are still working. I mean, even a 1% difference in fees can cost you hundreds of thousands of rands over your lifetime. Why? Because of that same compounding magic we just talked about. It works against you too.
Let's circle back to that emergency fund for a second. Yeah, it's cash for unexpected stuff. But there's a much more powerful version. And in the financial independence movement, it's affectionately known as FU money. It's having enough cash to just walk away from a terrible job, a toxic situation, or even just to take a well-deserved break. It is true power.
So, we've covered managing your money, growing it, and protecting it. But what's it all for? What's the ultimate destination here? It's this, right here, financial freedom.
Financial independence, or FI for short, is what we call the crossover point. It is that absolutely beautiful moment when the money your investments are making is enough to cover all your living expenses. Work suddenly becomes a choice, not a necessity. You can finally ignore that annoying morning alarm for good.
Now, this might sound like some far-off dream, but you can turn it into a concrete goal. All you need to do is find your target, your financial independence number.
And you know what? The calculation is surprisingly simple. Seriously.
First, just figure out what you spend in a typical month. Then, multiply that by 12 to get your annual expenses. And finally, you multiply that annual number by 25. That's it. That's your target number.
So, let's use the example from our source material. Let's say your monthly expenses are 20,000 Rand. Well, your annual expenses are 240,000, multiply that by 25, and your financial independence number is 6 million Rand. You see, actually seeing the number makes the goal feel so much more real and totally achievable.
This whole concept is really the engine behind the FIRE movement. That's financial independence, retire early. But the really crucial point to get here is that it's not just about not working. It's about using your money as a tool to buy back your most valuable, non-renewable asset, your time.
So as we wrap things up, I just want to leave you with this question. The numbers, the budgets, the investments, they're all just a means to an end. The real goal here is freedom. It's about choice. So maybe the most important question you can ask yourself is this. Once you've bought your freedom, what will you choose to do with it?